Hello everyone. So most of the times whenever you wanted to understand basics of accounting, we always hear the terms called debit and credit. Without that, nothing will get started, right? So for us to understand debit and credit, how to record them, how to understand them, how to apply them whenever you wanted to prepare any financial statements, or even before preparing your financial statements, you need to prepare a journal entries, then a ledger accounts, then you will be preparing your trial balance, profit and loss account, then your balance sheets. For that, it is very much important to understand how debits and credits are treated and how you will be preparing any journal entry or considering them, those debits and credits, while preparing your financial statement. In case you are starting your accounting journey for the first time, or you would like to refresh your accounting subject to understand this in detail, this is going to help you to make sure you understand all those debits and credits, which is a very first topic for you to start your accounting journey. So let's look into this. I just prepared a small document here explaining about what is a debit and credit. So rather than I go through each and every word and page here, so what I will do, I'll just quickly show you the pages and the content what we have it here. Then I'll also share this document via a link in the description and the comments as a pinned comment, so that you will also get an opportunity to download this and go through the document, and you will also understand. Whatever I prepared here is a very much self-explanatory document, which you will be able to easily understand once you go through it. What I have done, I made certain acronyms also where you can easily memorize and understand this, and make sure you understand the basic accounting equation where assets equals to liabilities plus equity, where how you will arrive that by preparing all your journal entries and the financial statements. You will understand that at the end. For now, let's look into a multiple approaches what we have it. Let's say there is a American approach and British approach. In American approach, how they are treating all the transactions, debit and credit. Let's look into this. Let's say they start with the assets. All the assets, if assets value is increasing, then that particular account will get debit. Similarly, an opposite side, when asset value get decreases, account will get credit. Let's take an example for this for you to understand very clearly. When we say asset, consider this as a fixed asset. Any asset that we are purchasing, earlier consider it was a zero value so far our assets in the organization. Whenever you are purchasing now for $1,000, now your assets are increasing to $1,000 because you are purchasing a new asset for $1,000. What will happen? Here you just need to debit the accounts of assets because it is increasing. Similarly, whenever you record a depreciation or a sale transaction of the asset, which will reduce the value of the asset, which means decrease in assets, then what you need to do, you're supposed to credit that particular account, the same account from where you are charging depreciation, or what is the asset that you are removing or selling for that matter, or we call that as a retirement of asset. And similarly, the liabilities, which will have opposite impact to assets. All the decreases in liabilities will debit it, and increase in liabilities will credit it. And so the capital, decrease in capital will debit, increase in capital will credit. Liabilities and capital will have the similar impact, and also the incomes also follow the same thing. All decrease in income will debit it, all increase in incomes will credit. So you take any example of income accounts. Let's say sales revenue is a income. Whenever you see sales revenue, which is decrease in income, or let's start with increase in income. When you say whenever you make a sales, that is an income to the organization, you will receive a money as a part of sales, then your accounts will get increased. That is where you will credit your revenue, which means the sales account is credited. And opposite side, whenever you have a returns, sales returns, or any other matter for that, and which will impact decrease in your income, those accounts or that in account for that respective amount will decrease it, and that is getting debited here. Similarly, for the expenses, whatever the expenses that we are paying to anyone, let's say you are paying a rent or a salary or a telephone expenses or any other direct or indirect expenses, any increase in the expenses, let's say you are starting at a zero now and you are not incurring any cost as on the moment that you are speaking, and let's say later you are paying certain expenses, your expenses are going up. So what you need to do, those expense accounts, you need to debit it. And similarly, whenever your expenses decrease, when I say decrease, anything that have a decrease effect, you need to credit that account for that respective amount. Similarly, for the stock as well, stock also will show whenever there is a new purchases happens, we have a lot of stock, which will increase the stock where you will debit the stock accounts. And whenever we issue the stock for a sales or other product manufacturing, the stock will get reduced. Or if the stock got obsolete or there is a scrap in the stock, that you need to count that as a decrease in the stock, then it will become a credit to the account. Okay, that's a American approach, how they follow it with respect to all the accounts. And let's look into this British approach. This we also call this as a golden principles of accounting, and we divide all the accounts into three main categories, which is a personal account, a real account, and nominal account. All the personal accounts, anything that you recognize with a person name or an organization name, will become a personal account, and they will debit the receiver who owes to the business or who receives cash or a kind. And opposite side, you will credit the giver, whoever is giving it, in the books of personal accounts. And similarly, the real accounts, you will debit what comes into the business. Let's say real accounts, some examples like a cash, it comes into the business, so you will debit the cash whenever you receive it, and credit what goes out whenever you are paying similarly the cash out, and we will credit that. And nominal account, when we say nominal account, like your all the revenues and the expenses and incomes and gains, expenses and losses, all these accounts will be part of your nominal accounts, and you will debit all expenses and losses irrespective of whatever the losses and expenses that we are incurring in the business, and you will credit all incomes and gains as a part of revenue gains and any incomes that we get it, will credit those as a part of nominal accounts. Either you can follow British approach or American approach, but both will result in the same thing at the end. Okay, so this will help us to keep the books balanced. When I say balanced, accounting is a double entry system, not just a single entry, where every debit should have a corresponding credit as well. I had given certain examples, few examples for you to understand whenever we do any transaction. Let's say, for example, if you pay 15,000 rupees in Indian rupees towards your accounts payable as a liability, with a 15,000 from your cash, which is an asset here, accounts payable is your liability, and there are two things. Both accounts must be considered here. So let's say which account you will credit here. You will credit the cash, because if you look into British approach, what does it say? Which is a real account, credit what goes out. Your cash is going out here, so you will credit the cash. And you go back to American approach and see that and one moment, yeah. So as per American approach, is this cash, whatever we are paying, is your outgoing asset, which is an asset for your cash. Then it is decreasing, and we will similarly credit this. And liability, the other side where we have that accounts payable, which you treat this as a liability. And see, liabilities, what do we say here? Decrease in liabilities will be debited, increase in liabilities will be credited. In this case, the liabilities are getting debited because the earlier, let's say our liabilities were 50,000, and when you pay 15,000 out of 50, still will have 35,000, which means your liabilities are coming down from 50,000 to 35,000. In that case, is your liability decreasing or increasing here? It is decreasing. When it is decreasing, we just need to debit the account. That's how we follow either American approach or a British approach for us to preparing journal entry. So when you get this clarity by looking into more examples, whatever I have done here, that will help you to understand how exactly debit and credit is treated. So here I made some more transactions and prepared a profit and loss account and a balance sheet here for you to understand in a better manner. What I will do with the interest of time, I'll share this document through the link where you can download it using using the link from comment section or in the description. Yeah, I hope you will find this resources are very much helpful. In case you are looking for a similar articles, I have also written more articles on finance and accounting through LinkedIn, where you can find my articles from my page, company's page, which is the KNR Ignite Solutions on LinkedIn. Is the link where you can go through and get this access all previous my articles. Hope you liked it. Thank you so much.